Okay, so we are live now and streaming. Let's see if we have if our audio is clear, if everything is okay for audio. If everything is okay with audio, we'll start. Let's see if we have if our audio is clear. Okay, let's go. Let's pull up the Nasdaq chart and we'll go with continuous contract and here as well. And we'll use a blank chart for this. We are going to remove all drawings. So on the right hand side, we'll start with the weekly chart, and on the left hand side we have a weekly chart, and on the right hand side we are going to have a daily chart. So the both of the charts are visible to you now. Let's focus on weekly chart for a moment, and from here on we'll start the journaling. So previous week, for the past 3 weeks, we are having three down close candles as a weekly candle, and last week we had up close candle, right? And first of all, what jumps out of here is this imbalance. So we'll start with this imbalance. All right. As you can see clearly, this is an imbalance. With ICT terms, it is termed as a volume imbalance. So we'll label it properly as a volume imbalance. We are going to tape it for, but right now we'll be focusing on this. So this is a volume imbalance on a weekly chart. All right. And second thing that helps out is we have all these highs. Let's see on daily chart for better clarity. That is our volume imbalance. We marked on the weekly chart. Now we are on daily chart. Yesterday was a down close candle. Monday was a round close candle. It was the first day of the month. So we started December month yesterday and it was a down close candle. So we are going to analyze how this all makes sense starting from the higher time frame weekly chart down to the lowest time frame. We'll go to a 1 minute chart and see how the markets are trading in all of these time frames. First of all, we have to mark our key levels. So when we go to the lower time frames, we can see how the markets are reacting to those levels, and we'll be labeling it with weekly volume imbalance because we saw it on a weekly chart. It's very important to label things properly so you can know which things are which and you do not get confused when you go down to the shorter time frames. And because this is a tape reading and journaling session, we are going to journal the price action of Monday, that is yesterday. So we have to keep in mind what was the key levels for the previous day. Alright, so we are going to mark this CV, that is a sell side imbalance, buy side inefficiency. We are going to mark it in a different color. Let's say this, or a darker shade of blue. Let's go with purple. Alright, so this would be a daily CV because it is in a daily chart and it is a down close candle that is forming the inefficiency. So it would be a CB, sell side imbalance and buy side inefficiency. Now all of these things are very important because when you are taking a live trade or you are demo trading with your funded accounts, these are the things that will help you to see where the price is going and where it has come from in the past. Alright. So we have marked the CB and we are going to mark its quadrants as well. Right? So these are the quadrants of the CB and we are going to put the weekly volume imbalance into quadrants as well. But the whole range is not important for us for the yesterday's price action. So we are going to remove the rest of the levels and keep only the selling ones for the sake of brevity. And with this, we are going to take off these levels. Okay, so as you can see now, this is the upper quadrant of this weekly volume imbalance. This is the consequent encroachment of this weekly volume imbalance, which was not ready to yesterday, but it is salient for today's price action. But we are, as we are journaling the yesterday's price action, we are not going to have it in our charts. And these are the three quadrants of the daily sell side imbalance buy side inefficiency, 25, 50, and 75. And this is the total area of the daily CV, right? Also, we have this buy side BC right here, buy side imbalance and sell side inefficiency. we are going to mark it as well. But as we go further, we are going to mark this. But you can see at this moment, let me hide it for a moment and I'll show you an interesting thing. And put this into quadrants. See, the Monday's candle failed to touch the consequent encroachment of this inefficiency when this level as well. So the first quadrant, not a single candle was able to close below the first quadrant, and it wicked down below the first quadrant but failed to touch even the consequent encroachment, and this order block is where the price reacted off and spooled higher. Right? So let's go back to our daily chart. And for the journaling purposes, we are going to write stuff down over here in the blank space of the chart. So this is our Monday's candle. First, first day of December started strong with an entry back into the daily buy side imbalance as the efficiency, but failed to touch the consequent encroachment of the inefficiency, indicating that we are in bullish conditions. Alright, so let's go ahead and take the screenshot and save this. Now we are going to analyze this, how the daily low was formed, and we are going to a smaller time frame. So let's go with 15-minute chart. Here we are going to this is the Sunday opening, Sunday 6 a.m. opening. It was this candle, This was the opening price.
All
All
right.
right.
So
So markets open.
this
This
is the
is the
opening
opening
price
price
of
of
Sunday.
Sunday.
New
New
week
week
opening
opening
price.
price.
So
So
why
why
is
is
this
this
important?
important?
First
First
of
of
all,
all,
any
any
price
price
action
action
below this below
below
this
this
price
price
is an
is an
indication.
indication.
If
If
we
we
are
are
bullish,
bullish,
this
this
is
is
accumulation
accumulation
of
of
long
long
positions
positions
by the
by the
smart
smart
money.
money.
All
All
right.
right.
And
And
this
this
price
price
is
is
important
important
all
all
over
over
the
the
week.
week.
See,
See,
let me
let me
hide a
hide a
few
few
things
things
here
here
and
and
we'll
we'll
put
put
it
it
back
back
on
on
Mondays
Mondays
more
more
important
important
for
for
us.
us.
All
All
right.
right.
This is
This
the
is the
new
new
week
week
opening
opening
price,
price
and
and
we've
we've
opened
opened
almost
almost
at the
at the
same
same
point
point
where
where
we
we
closed
closed
on
on
Friday.
Friday.
See,
See,
this
this
is
is
the
the
Friday
Friday
scandal.
scandal.
Friday
Friday
was a
was a
rather
rather
short
short
because of
because of
CME
CME
halt,
halt,
the calling
cooling
issue
issue
reportedly.
reportedly.
They
They
say
say
it
it
was a
was a
cooling
cooling
issue,
issue,
but
but
I
I
don't
don't
know.
know.
So,
So,
and
and
it
it
was a
was a
holiday,
holiday,
a
a
Thanksgiving
Thanksgiving
holiday,
holiday,
which I
which I
guess
guess
all of
all
you
of you
had
had
an
an
amazing
amazing
holiday.
holiday.
This
This
price
price
is
is
crucial
crucial
and
and
it
it
would be
would be
extended
extended
for
for
the
the
rest
rest
of the
of the
week
week
and
and
for
for
the
the
weeks
weeks
to
to
come,
come,
at
at
least
least
5 weeks,
5 weeks,
because
because
of
of
the
the
IPTA
IPTA
algorithm.
algorithm.
All right.
Alright.
So
So
on a
on a
one
1 15
minute
minute
chart,
chart,
we
we
have
have
noted the
noted the
new
new
week
week
opening
opening
price
price
and
and
the
the
market
market
went
went
up
up
a
a
little
little
bit,
bit,
say
say
482
482
to
to
49,
49,
5
5
around
around
70
70
handles,
handles,
68
68
handles
handles
from
from
here,
here,
and
and
then
then
it
it
gave
gave
up
up
the
the
ghost,
ghost,
went
went
lower,
lower,
cleared
cleared
all
all
this
this
sell
sell
side
side
liquidity,
liquidity,
cleared
cleared
all
all
this
this
sell
sell
side
side
liquidity.
liquidity.
Let me
Let me
remove it
remove it
for
for
you.
you.
This
This
was the
was the
sell
sell
side
side
before
before
that.
that.
But
But
this
this
sell
sell
side
side
is
is
pending.
pending.
So
So
market
market
back
back
come
come
back
back
to
to
here
here
later.
later.
But
But
for
for
us,
us,
for the
for the
backtesting
backtesting
purposes,
purposes,
we
we
are
are
going to
going to
write
write
down
down market open flat
on
on
Sunday.
Sunday with minimal opening range gap.
All right.
Alright.
So
So
market
market
open
open
flat on
flat on
Sunday,
Sunday,
minimal
minimal
opening
opening
range
range
gap.
gap.
It
It
should be
should be
like
like
minimum
minimum
opening,
opening,
new
new
week
week
opening
opening
gap.
gap.
But
But
you
you
get
get
the
the
idea.
idea.
And it
And it
was
was
due to
due to
festivals.
festivals.
It
It
cleared the
cleared the
buy
buy
side
side
above.
above.
This
This
was the
was the
buy
buy
side.
side.
Let me
Let me
show it
show
to
it to
you
you
on
on
a
a
smaller
smaller
time
time
frame.
frame. Market opened here.
This
This
was
was
the
the
buy
buy
side.
side.
This
This
was
was
the
the
sell
sell
side.
side.
Market
Market
went
went
low.
low.
Immediate
Immediate
sell
sell
side.
side.
Immediate
Immediate
buy
buy
side.
side.
And
And
then
then
it
it
went
went
up
up
and
and
gave
gave
up
up
the
the
ghost
ghost
and
and
went
went
below.
below.
This
This
is the
is the
change
change
in
in
state
state
of
of
delivery.
delivery.
This
This
was
was
the
the
relative
relative
equal
equal
loss
loss
formed
formed
after
after
the
the
Sunday
Sunday
opening.
opening.
Back
Back
into
into
this,
this,
and
and
then
then
low
low
for
for
the
the
buy
buy
side
side
was
was
watched
watched
on
on
the
the
15-minute
15-minute
chart.
chart.
All right.
Alright.
Take a
Take a
screenshot
screenshot
of
of
this
this
for
for
your
your
journal.
journal.
I'm
I'm
taking
taking
for
for
mine,
mine,
and
and
if you
if you
want
want
it,
it,
I
I
can
can
make
make
it a
it a
PDF
PDF
and
and
send
send
it
it
to
to
you.
you.
Hmm.
Hmm.
Hello,
Hello,
Stephen
Stephen
CQ.
CQ.
Hello, everyone who
Who
have
have
come
come
here
here
to
to
show
show
their
their
support.
support.
I
I
didn't
didn't
see
see
your
your
messages
messages
earlier,
earlier,
and
and
yes,
yes,
I
I
am
am
going
going
to.
to.
Is
Is
there
there
an
an
echo
echo
issue
issue
with
with
the
the
volume?
volume?
Okay,
Okay,
let
let
me
me
try
try
to.
to.
The echo issue should be gone by now. Everyone who have come here to show their support. I didn't see. Okay, let me try to. Is there any echo issue still? Do you still have an echo issue? The echo issue should be gone. Is there any echo issue still? Do you still have an echo issue? Okay, so thank you everyone for watching once again, and we are going to. Yes, Stephen, I will come back to your question later on. That how am I able to scalp on a 15-second chart? But this is the foundation you have to know before you are able to do a scalp. If you are not familiar with these things that I am marking over here, these are the foundations that you do not see on my chart, but I am using these concepts to know which direction they are going to go and when I have to put on a trade. So that on a 15-second chart, you do not see all these things that I am marking on the chart. But these are the key concepts. These are the things which help me know which direction to go for. Am I going to have to short or I am having a long entry, and where to enter and where to exit, where to put a stop loss. These are all the things that matter. So if we skip the base work, groundwork, we are not going to build castles upon that. Now, this function, which I am telling you right now, that the market attacks both sides of the available liquidity as soon as it opens. This in itself is a marvel. You can trade every single week and every single day, and you can be sure that it would give you a very high win rate. Because as soon as market opens, it would attack both sides of liquidity. You have to just wait for it to sweep one side and then right to the other side. So for our general entries, we took the sell side liquidity and see the magic over here. So that if we know we are bullish, we can take these sorts of entries on a 15-second chart. These top ones are really important for scalping. How do we know this is going to rally higher from here? The answer is simple. But I'm not going to reveal it right now, am I? Because we are having a journaling session and we are not discussing trades in this session. Let's go. But I will give you a hint. I might explain it to you at the end of the video. Alright? On a 15-minute chart. Okay, let's skip all the skills and go to 1 minute chart. I know not all of you like 1 minute chart, but a lot of the scalping I do is based on this 1 minute chart. The idea of this trade comes from 1 minute chart in the higher time frame direction. The direction is higher time frame, but 1 minute chart is crucial if you want to take trades on a low time frame like 15-second chart, 30-second chart, or even 5-second chart. Right? So, if you want to have your mind blown away, first thing you need to do once a new week opens here on this is by the way New York open time, New York time -5. So as soon as the new week opens at 6 p.m. on Sunday evening as per the New York time, you're going to find an inefficiency. Alright? So that is like this. See that? A buy side imbalance and a sell side inefficiency. Here, this candle went up and come close back here. Second candle opened up here, went slightly lower and extrapolated it higher. The third candle went up, opened flat, come back below and went higher, leaving this gap open. Now this is our first gap for the new week. Do you get me? This is the first gap for the new week. So we are going to mark this gap and I am going to show you magic of how you can trade over this. And we are going to this is first presented. Fair value gap weekly. Alright? And then we are going to put a middle line on it and extend it to the right. See? Now we are going to see how the price reacts to this level right here. The one we marked at 1806, that means at 6 p.m. and 6 minutes on Sunday. Now we are in Tuesday. Let's see how this reacts. This is a very powerful concept. Yes, I am going to trade live, but first we have to build the basics. When the price comes back to it, and it would come back to it, and there are so many trades that you can take, so many ideas that you can form over here. Nail to the point, went up, come back below, went up, body stopping at the fair value gap, came back below one more time, and this is the key time of the day, 2 p.m. starts a session 4. Okay, write in the comments what does 2 p.m. starts. At 2 p.m. begins our, okay, anyone, someone, silver bullet time. Yes, you heard that right. 2 p.m. starts a silver bullet time. And okay, look at it today. See the precision it offers for so many scalps. So many scalps. Here, these are the trades I'm taking at the key time of the day. Mind you, at the key time of the day, these are the type of trades I'm taking. High, lower high. We traded above this high, but this high is left open in a market when we are bullish. We did not went below the consequent encroachment on daily chart, the daily BC, buy side imbalance and side inefficiency. We have cleared this low. What is the next obvious target? This high, and we are getting the confirmation from this first presented weekly fair value, right? This is the easiest run ever. So you get 486 to 500, 15 handles, easy 15 handles. Okay, so what is the time here? This we have this at 6:26. That is the beginning of New York AM session. New York AM kill zone. Okay, we go back above, down, we clear this low, came above, failed to clear this high. Now this becomes buy side, which is attack later on. Form a low, come back up again. We fail to hit those lows, and on the final here we go back above, clearing all this side by side, but this is left open. So what we do? We take support from our weekly first presented fair value gap, went above, slightly lower. Again, see the body stopping at the consequent of encroachment. See, okay. Now we have a market opening at 9:30. This is the Tuesday's price action, by the way. For Monday we went lower and came back higher. We went below that, came back up, and for the 9:32 candle here, touch and go, and see the rally from here. These are the type of scalps you want to take, but this is the basic you need to know. When it is going to work, how much you have to risk, which direction do you have to pick, all these things. And this would come from journaling, backtesting, and all the groundwork, all the foundation we are doing here. So if you want to take this type of trades by yourself, this is the groundwork we are going to be doing. Let me hide it for now and complete our analysis. Alright, so went below, I clear these lows. Okay, so let me tell you about one more concept. Focus over here. When we clear this low, right? When we cleared this low, we had an inefficiency, this gap between these two candles. right? And then we had a gap between this candle. This is the last gap we had before the market reversed and went higher to take on this high. So change in state of delivery. First we are making lower lows, now we are making higher highs. Alright. This is the last inefficiency. This is the last inefficiency or the last fair value gap before the market changed direction. Am I clear? The last fair value gap before the market changed direction. This is important, so we are going to mark it. And when the price comes back over here, it fails to close below the half of this candle, half of this gap, and is always closing above the middle point. Yes, we are having big down below, but it fails to go close below the half of this. What does this indicate? That yes, we are positive in our expectation of the market that it is going to have bullish direction, right? So we have this over here, all this liquidity that is going to be attacked by the market, and the moves start from this fair value gap, which is just before the market turned its direction. Alright, let's go to a 5-minute chart and refine it. Okay, and see the magic over here. So now this is no longer a fair value gap before the market changed directions. Alright. Yes, this is important if you are trading on 15 minutes chart, but if you have affinity for the lower time frames, just like I have, you are going to ignore this and mark this. Starting from here to here. Because okay, look closely, look closer. You can trade like me. This is really simple. We have this small gap which we would account while marking our inefficiency. Alright, first we had this inefficiency over here, but if we refine it on lower time frame, just like we are doing here on a 5-minute chart, this is our last inefficiency before the market changed gears and started going higher. Once it start going higher, we wait. We wait for the market to come back to us. Market came back to us over here at 750 during 750 to 810 macro. Gave us a really nice run of 200 pip from of around 75 handles for one contract, which is basically $1,500 if you trade one contract, one mini. And then during 9:30, see the precision. Market went below. Yes, it went below. It went to 209.25. Alright, and our fair value gap ends at, what is the opening price of this? 210. Let me mark it for you so you can easily see. What is the price? 210. And the candle went below 209.25. A quarter, 3/4 of one handle. That's the precision you have with this concept. And then The market extrapolated higher to the buy side liquidity, which is around 150 handles, safe to say, or $3,000 if you trade with one contract. Or if you're like me, you like to trade with five contracts, that is $15,000 right here. What do you say? Is it hard? Am I making this hard? Am I making this boring? I don't think so. Money is never boring. Money is never hard. You just need the patience. If you're patient enough and wait for the price to come back to you, rather than buying, sell, buy, sell, buy, sell, buy, sell, buy, sell. Oh my god, I'm bored. What should I do? My life is shit. I should buy here. I should sell here. My girlfriend says this. Today's horoscope says this. No, wait for it to come back over here. And it always does. Always. And and you can do this on the other side as well. But you have to be nimble, and you have to know what the higher time frame direction is. So if you can reverse this concept and use this fair value gap, because this is the last bullish fair value gap and the market started trading lower. See what I am trying to tell over here? This is the last fair value gap. Market went below, failed to make another high. So this high is higher than this high. And then it went lower, came back above, again failed to make a high, came back below, and now you have confirmation that it is not longer interested in going higher, at least for now. At least for now. Alright? So when market comes back above again, you see the precision over here. It is staying in the lower quadrant of the fair value gap. It does not want to go, it barely touched the midpoint of this fair value gap. So you take a short over here, but you have to be nimble because the higher time frame bias is bullish. So you exit over here, right here, this low. No more greediness. Don't be greedy. This is still 380 into, let's say you enter over here, 310. And what is this? 274. That is 35 handles. Not a bad day, not a bad deal. You are getting 35 handles, and if you are right in your analysis, it should not go above this 329 or 330. So to estimate risk reward, you can do this vice versa. Alright? Two examples. No, don't say that I am not teaching you anything. And I am going to, for each one of you that wants it, I am going to give you all the screenshots that I am taking today for your journaling purposes so that you can come back to it later at the end of the day, end of the week, end of the month, and review how the Nasdaq traded over time, how the Nasdaq traded last week, and you can build your skills from there. Just a few minutes time every week, and I'm all doing this work for you, journaling for you, right? You have to save, you have to come back, you have to work for it, and you are giving me screen time over here. I can give you PDFs easy. I'll send you the PDFs from tomorrow's live stream. Starting tomorrow, you will all have the ability to get the PDFs for free forever. I'm never going to charge any single one of you for this. Alright, let's begin. Let's carry on with our backtesting. Let me make it a sweet thing for you. Let me make it sweeter for you. Alright, so We are going to focus on times where you can easily have setups, right? And we are going to focus on those times only. Let's go to 1 minute chart and start searching for where are the best places to get a setup and how to hunt for it. Alright? We are going to journal based on this. So, best place is for the London session. Let's start with the London session. Alright? So, the London session, the best setup you will get is during 3 am to 4 pm. 3 am to 4 am. That is a silver bullet time. If you are only available during this time period, 3 am to 4 am, let me show it to you how you can easily make money in the London session. Or should I do 2 am to 5 am? Okay, let's do 2 to 5 and then we're going to have a silver bullet trade as well for you. These things form every single day. You don't have to face FOMO. So, in this 2 blocks of time, we have the entirety of London session for the Monday, 1st December. So, before starting each session, we have to mark out where the liquidity is. Alright, where is the sell side, where is the buy side, where is the market coming from? Okay, so let's go back to the high time frame and what the previous sessions did. Alright, so the previous session, which is the Asian session, starting here at 6 am, 6 p.m. on Sunday, all the way up to 2 am. What market did is, let me bring back a few more things for you. Okay, now can you see this? See all these fibs over here? Let me show you again what that is. This. What we have marked is, we have marked this previous sell side, buy side imbalance, sell side inefficiency into quadrants. Alright, so when we go back to lower time frames, this is what you'll see. The buy side imbalance, sell side inefficiency divided into quadrants. Okay, we started from here. On all the Asian session, we went below this sell side liquidity, we rated the sell side, we went into the daily buy side imbalance, sell side inefficiency, but something changed here. At this point, something changed. We do not want to go back below this. Market do not want to go back below this. It consolidated over here and started a new range higher. At a time when the markets are bullish, went up, broke this high, a little retracement into the range, but still far above this. Went up, below the daily, buy side imbalance, sell side inefficiency, and kept these highs open. Okay, we are over here. So we are studying London right now. What Asian session did? Went below, came back up. And now we are over here when the London session is beginning. Let us go to a smaller time frame. Let's go to 1 minute chart and see what the London session is trying to do. Just like we did, just like we did in the new day, alright? Just like we did with the new day, we mark where we open at 2 at 2 a.m. This is where we open it. This is the 2 a.m. opening price, right? And we are going to stretch it out for the entirety of London session. Okay, and just like we did over here with the new day, we are going to mark our first inefficiency. Okay, and we are going to mark the nearest buy side and sell side, just like we did when the new day started at 6 a.m. 6 p.m. on Sunday. So our from this point on, where is the nearest buy side? This was the buy side. Okay, I'm going to remove that because you understand it now. This was cleared, this one we cleared already. Now the next big thing is over here. All right, just the first one, not everything over here. This is the first buy side we are going to encounter if we go higher. All right, from this price, and for lower, this one or this one. Okay, the but what is the first one? I told you to mark first inefficiency and first liquidity. First one is this and this. This one is lower and both are relatively equal. So we are going to mark this. This is going to be our sell side liquidity. Okay. So market did whatever it did in the Asian session, and now we are at the London session. We start London. We went above, taking this minor buy side liquidity. Okay, and then we go lower. This is the first inefficiency of the London session. Go lower. These are the relative equal lows. We do not go below this as well. See, we did not touch them. Right? Go over here, higher once again, crossing the inefficiency with this strength, and we come back lower for this sell side. Now I told you to wait for one liquidity, either buy side or sell side. The first one, we wait for it. The first it takes out sell side. At a time when we are bullish, It takes sell side first. When we are bullish, when we fail to go below this, when we are consolidating here and then making the highs like it is making here, here, here. So we have everything ready for the hunt above this. Okay, we extrapolate higher, taking out these highs, change in market structure. So first we were making lows and now we are back to making highs. Okay, when we are back to making highs, what is the first imbalance? That is fair value gap going lower. Remember this, we do not have a fair value gap over here. We have a small little fair value gap over here, a really minute one, but this one is really big, right? And this is the first fair value gap we encountered after 2 a.m. So let's mark both of this from here to here and change this color to something different so you can know which one's which. Alright, this is the last fair value gap before the market started going higher. Once the market went higher, I told you market would come back to it. See here, this is your entry for a 15-second chart. Now you frame your setup on one higher time frame, 1 or 5-minute chart, and then you enter on a 15-second chart when market comes into this area. You understand it now? For 15 seconds, you have to wait when market comes into this area and then buy it. From here, the market goes above, consolidates for a while, but it is not interested in taking lows. I told you, market does not interest in takes no interest in taking out lows, even if we are in a consolidation. See, so this low not taken out. The body stays above this middle point of consequent encroachment of this inefficiency, high, lower. We cannot assume this is a low because this is a swing low. Then we form this low, take out by minor difference, but what price is trying to do is this. Remember this line? This is the opening price of first opening price of London session. So market is consolidating below there, picking up orders from below here, but is not really interested in going lower from here. If market was interested in going lower from here, you would see the candles burying into these fair value gaps, entering it again and again and again. We consolidate for a while and then we have an extrapolated move higher. Let's see how much ground it covers. From 268 over here to 314, that is around 50 handles during London session in 3 minutes. These are the type of moves you see when I'm trading on a 15-second chart, because this is the premise. Yes, you are going to have to wait through this consolidation, but during this consolidation, you are not in any drawdown. If you are taking your entry in this, in either purple fair value cap or this green one, you are not facing any significant drawdown. Yes, you might have to wait, but you can be certain that this is the way you can book your targets, easy targets, and leave something for the rest of the day or on runner. So the market, when it takes this liquidity and this one, you could have something extra beside this pie, the easy target. See, so this is the entirety of London session. consolidate below, take out sell side, consolidate again, and then buy side and easy in fat profits. Coming up next, let me remove this for you so the chart is clean. We have PM session. Okay, not PM session, but this New York session, which starts from, okay, let me take off some levels from here. All right, from 7 a.m. to 11 p.m. All right, so for what do we do when we are entering a new session? We mark out previous liquidity. Okay, so from here, what is the last buy side? Here, easy. Above this price, what is the last buy side? You can mark over here, but this one is prominent, right? Because this is a proper swing high. This is the buy side liquidity, and this is the sell side. And this one and this one, this is relatively equal. So this is the sell side liquidity. And because we had London session, it is important to mark out London lows. And these are relative equal lows in London session as well. So these are the sell sides. One is the first sell side and second is London lows. Starting from here, what is the first inefficiency you see? In this one. You're right if you said this was it. First inefficiency, taking London lows, and while we are at it, let's mark London highs as well. Okay, and London highs are relatively equal as it seems. This is the London highs. Okay, this is the first inefficiency. We start going lower, lower sell side liquidity, lower, and then we change direction. We started taking out highs. Okay, so first inefficiency before this is right over here. Change this color to something more prominent. Mark, go above, go above. And then when we come back at what is the time, what is the time, what is the time? 9:43 after the market opening. We came back below here. Let's remove it for a moment and mark the first presented fair value gap after 9:30. Why 9:30? Because that is the market opening time. Okay, this is where the market opens low and higher. This would be our first presented fair value gap for AM session, that is after the market opens. Alright, so this was the last inefficiency before the market started going up. When we have buy side liquidity pending, when we have London high pending, and at a time when we are bullish because market is not going below 0.75 levels in a decisive manner. We are not going below 50%. This is the by far we are going to have. This is the, and we are not taking these lows as well. These are the pre-market lows. We took those and inefficiency and higher. Is it hard? From 220 to 340, 120 handles. Isn't this easy enough for everyone to do? And yet you wonder why those people do not take interest in trading. I don't get it either. I mean, why would you skip something that is as good as this? Some people don't share the enthusiasm you have, and this is unfortunate. Now, this is the lunch session from 11:30 to 1:30 we have New York lunch, and then we are entered into PM session. Same drill, last liquidity, opening price. This is the opening price. Let's mark it from different color. This is the opening price at 1:30. First liquidity, this is buy side. This is buy side. First liquidity lower, this one. Market as sell side. Okay, and first fair value gap, which would be this. Now it is properly annotated. First presented fair value gap for PM session. We consolidate, take out first buy side, fail to go above the second buy side, that is the high of the day, come back lower, this inefficiency, get back above. What is our target? Easy, this sell side. I forgot to annotate it properly. This sell side and this sell side. Easy targets, 471 to 454, 446, 25 handles, easy. So let's review what the market did. This was the high of the day, formed at 12:45 p.m. on Monday. So this is Monday. We started from the here, started from here. Let me remove these things for you. And go over it one more time over 5-minute chart. This is Monday. Asian session went above, opening price went above, crashed. Let me hide this as well. So now these are sessions and this is the full day. Opened over here, we opened over here, went slightly above into the daily buy side imbalance and side inefficiency. This was done over the Asian session. So Asian session was a expansion move. Alright. So we retraced into range during the London and pre-market. This was the low formed in Asia. The high was formed in Asian session. Went below daily BC. Failed to go to the consequent encroachment. This was the 25% level. Went up back into the range. Left these highs open during the London. Failed to take these highs. Retraced one more time during the pre-market session. This is the pre-market session. Cleared the London lows, Asian lows, this fair value gap, which we mentioned earlier, extrapolated higher, clearing this buy side, back into the range, first presented fair value gap over here, clearing these highs during lunch macro, retracement during lunch macro, but no highs were, no lows are being taken out. Once more, we go above, leaving these highs open for the next day, for Tuesday, this high, and the daily high. These are relative equal highs, and then the next obvious target is this for Tuesday, there is today, and then settle into consolidation. Today, we open from consolidation, take these relative equal lows over here, went back above once more during the London session, 3 p.m. silver bullet. This is into the first presented opening range. Let me show it to you. That will make it more sense. This is where I would have suffered a loss because once we had cleared these lows, failed to take high, another leg lower. This was during the Asian session. Once we had this high run up higher, I would have taken this fair value gap over here, but I would have been stopped out. This is where I take losses, but still, and the next leg up, I would have made this back, but still, this would have been a loss. So we went up high. These highs were taken out today in pre-market session, and then when we have this move, this is forming like a head and shoulder type move. So any move back below here, this neckline should attract more sellers, which make the market go higher from here. Anyways, that is it for today. I'll meet you tomorrow with all these PDFs of the things which we looked at today. And good luck, good trading. Have a nice day, night, afternoon, depending upon where you are.